China is building cities at the fastest rate, which is seen in the migration of farmers and rural citizens to major metropolitan cities such as Beijing and Shanghai. This means that there is a huge need for properties, apartments, and homes to support the new way of life. Before 1998, the government gave every Chinese person who lived in the suburbs a residential flat to live in. This was because the land was owned by the state, leasehold, and people were not allowed to buy it. When updated changes to their constitutions were made in 2004, people were finally able to buy land and homes in their own names. This became a dream for the middle class, which now includes 400 million people. It gave them the chance to move away from minimum wages and have equity tied to their names. They are now free to start making money for themselves, their families, and future generations. This was more than just a need for people to have a place to live. It became a national economic goal for China. But just like anything else that grows quickly, it could just as easily crash with a jolt. Regulators were blindsided by the rich economic benefits flowing into the country, so they kept drilling their focus down on getting more people to sign up for home ownerships without giving much thought to the homes themselves. The Chinese economy has made money off of real estate projects by spending billions of dollars to buy land from local governments, property developers, and even construction companies in the hopes of selling all of these units to new home buyers. As a country run by communists, they were able to avoid international oversight and rules for as long as they kept their housing market in good shape and health. This also meant that if there was a housing bubble, the damage would stay in the country instead of spreading around the world like it did during the financial crisis of 2008. Or did it? We will learn more about the property bond market and the big institutional investors who had a stake in China's housing economy. What does the housing market look like in China? To understand how China's real estate market works, we need to know about a few key players who create the demand for these houses and could also kill it. All of the land in their district and close by is owned and controlled by the local government. They are a big part of what makes the economy go because they decide what gets built, where, and give the permits to do so. Some of the most important things they decide are which locations to build business centers, industrial parks for manufacturing, or even residential areas. The developers talk with the local governments face to face. They figure out where to buy land from the government so that they can build those commercial building projects. Once they have approval, they move on to the next important stakeholder, who is the backbone of the housing economy. These homes are offered to the people who are told in advertisements that the area is beautiful and that it comes with a lot of nice things such as access to amenities, stunning views, and spacious living areas. Because the cities are growing quickly, there is a strong need for homes to house the mass population of China. When people buy these homes, public money will keep going to the developers so that they can pay the construction companies and invest the profits from the current project into their next one. To keep the economy stable, the central government plays a key role in regulating how much leverage these mega corporations use. They tell the banks directly what strict rules developers have to follow before the banks can give them loans or other money market funds such as housing bonds to fund their housing projects. The central government is trying to control the housing market and economy by making sure prices stay stable and inflation stays low and under control. Construction workers are the builders who work behind the scenes to make sure that these projects are built and finished on time. In the end, they need the developers to give them contracts and the legal paperwork they need to keep building these homes. Without developers, these workers, although skilled, are not allowed to build on any piece of land. Keep in mind that these construction workers are also people who live in the area and whose wealth depends on how well the housing market does. The cause of the housing bubble. China has enough empty homes and buildings to house 90 million people, which shows that there is a clear oversupply considering most of these units are empty. 70% of the wealth of China's families is tied to their homes, which clearly shows their dependence on the housing market. It's a bad idea to put all of your eggs, or most of them, in one basket, because what happens if the condition of the market becomes volatile? Spreading investments out among different investments with lower risk spreads is the better choice. In China, a simple apartment costs about 50 years of the average household income. In London, it's 15 years, and in New York, it is only 10. This means that the average person in China carries decades of debt that takes a lifetime to complete before they can finally have ownership over the house. The average rent for a 2-bedroom apartment is about $1,258, which is too expensive for most middle-class Chinese people to pay, considering their minimum wage is only at $700. In more developed countries, mortgage payments do not start until people get the keys to their homes. In China, however, a 40% down payment is required and mortgage payments start long before the construction even begins. People are basically paying for a house that has only been approved by local governments and hasn't even started being built yet. The developers then sell these apartments to the open market before they are even complete. This is made possible by the deposits that the buyers put down, with some of them even paying off their loans before they get the keys. This business model cannot sustain because it puts pressure on people to buy these homes even if it's well out of their budget. This is because property developers need to sell these homes in order to pay back their banks and debts, which they got by getting money from offshore sources such as BlackRock and HSBC. To be fair, everyone was sure that China wouldn't let their housing economy go down. Not only is it their main source of income, but as a communist country, they are thought to be competent to handle things on their own without any outside help. As it began to fall, Evergrande started to fall behind on payments for wealth management products like retirement plans and voucher payments that were supposed to go to bondholders in the property market in the form of dividends for their investments. At the entrance to the Evergrande offices, fights began to break out. People who are still making payments or who are still waiting for their houses to be built are angry about where and how were their money taken. The whole bond property market crashed along with the people's money, trust and cash flow into the economy. This has now had a big adverse effect on the economy because the biggest property developer in China seems to be insolvent. Offshore money from big institutions like high-yield bonds held by BlackRock, Goldman Sachs and even HSBC were all lost in this wave of turmoil. As of now, Evergrande owes $300 billion in debt, which is 2% of the Chinese GDP. The IMF says that China's housing market has helped the country's GDP grow by twice as much as the housing market in the USA, which is the biggest economy in the world. This means that even small changes in China's housing market can cause a big drop in prices and hurt their economy very badly. What can the developers who create projects do about it? Developers can start by following the 3 red lines policy, which is used by the Chinese government to evaluate developers' financial health and their relationships with the banks. The loans that these developers took out are for large amounts that are significant enough to have an effect on the Chinese economy if the developers do not pay back their loans on time. As a standard, the Chinese government has set up 3 lines that developers must stick to show that they have enough money to keep getting loans to grow their businesses. And to show how bad the housing crisis is in China, 50% of the country's biggest developers have broken at least one of these 3 rules. The ratio of assets to debts must be more than 70%. This means that for them to be able to take on debt, the total value of their assets have to be 70% higher than the value of their debt. Net debt must be less than 100% of equity. This means that at any given time, the developer should have less debt than equity value. Equity value includes shares, preferred stocks, and earnings that were kept by the company. This will make sure that the developers does not have to borrow money solely to stay afloat in operations. The ratio of cash to short-term loans must be less than 1. This means that the developer has enough cash on hand to pay off all short-term debts like overdrafts, loans for 12 months, and their suppliers. In conclusion, China's housing market has grown a lot in recent years. This is due to things like rapid rural to urban migration and a growing middle class with more money earned. But there are strong signs that the market has reached a point where it is too hot and that China may be in the middle of a housing bubble. This is marked by prices going up too quickly, too much money being put into real estate, and developers taking on too much debt without any oversight. In the future, it's hard to say what will happen with the housing market in China because there could be more protests from people, or the government could simply bail all developers out if things get too bad. Policymakers need to keep a close eye on what's going on and take the right steps to prevent another mortgage crisis like the one in 2008 from taking place again.